I bet. Welcome back. I'm gonna try to talk a little bit louder this time. So this is my market review and how I'm gonna be going over the market for you guys and what I use to determine high probability. Well, we're gonna be using fair value gaps, but high probability entries and how I determine them. So without further ado, let's get into it. So I'll be on the weekly chart. I'll be putting on the new week opening gap because I want to see that get filled. Obviously, daily chart. Oh wow, nothing special. Gap lower. Daily relative equal lows from this low. Considering we're still in the downtrend, mind you, we're bearish. What else do I need? I don't really care about that. Yeah, I don't care about none of that either. Really, just this wick. I'll use the gradient. So it's really just this wick, and then I'll use like let's say Thursday current new day opening gap, and this new week opening gap. Close, open. Nah, just use that. Yeah. And then take this off. Hold daily high. Keep that there. And every up close candle should support price. That should be about it. And last but not least, my opening range gap. Close. I don't know why I did that. This nigga stay crying like damn mouth. 967.50. It's my opening range gap 50%. And then you have the low. Range gap low. And then my opening range gap high, which you put on before hand or when market opens. So boom. That's all I got on the chart. Because everything else, you can add all that other stuff, but it's not necessary. Sell side here, and then we'll do the minor sell side here. Alright, so starting off, I'm bearish, looking for shorts. First fair value gap that forms on regular trading hours after 9:30 open. Alright, so 9:30 open, trade down, minor sell side. Pretty sure there's a 5-minute fair value gap. Busy. So minor sell side, we trade up, we take the buy side. We take the buy side. I'm not worried about this. Macro hasn't even started. Doing absolutely nothing when the macro does start, and then we break down. So we failed to reach the upper quadrant of that premium wick that I marked out inside the macro. So we're inside the macro, we fail to reach it, and then we start to break down. A little sweep here, order block, change in the state, respected, and then break down 2022. 2022 with no entry though inside of the consequent encroachment of that wick. No entry though. So since there's no entry, I'm seeing this as just manipulation. Manipulation up, take out minor buy side, engineer liquidity, change that to buy side liquidity, engineer liquidity, and then we get no entry. So I'm not trusting this, I'm not confident in that. We trade lower, plus rejection block, bullish rejection block, bullish rejection block, consequent encroachment of this wick. We respected it, didn't even reach it, didn't even reach the low of the wick. And then we start moving higher, and then we get an actual 2022 model. And even though this one isn't in the direction, this isn't the main entry that I'm gonna be talking about, because yeah, it's just not, because we're bearish, but this will do to start it off. So you have your market structure shift, rejection block. So we failed to take out the sell side, which means we're engineering liquidity, and then we have buy side here. So if we're failing to come and take out any liquidity down here, and then we displace, market structure shift, first for value gap, order block, basically a breaker as well. So you have a change in state, breaker, first for value gap, wick quadrant, lower quadrant, and then an actual normal fair value gap. That is a very high probability entry to go long, to the minor buy side, to the inefficiency, wherever you want. But that is how I decide very high probability entries, and it's based off wick quadrants that are on the daily chart. So as you can see, we fail to reach it, tap it here, but we're only wicking into it, very responsive. Look at the bodies, closes at the opening range gap high, opens below it, trades up, fail to reach it, and then off to the races again. Fair value gap inside of the 10-20 macro to support price in its direction to go to the buy side, since we failed to reach the sell side. So we take out buy side one more time, fake move in the real direction, Judas swing, possible entry for anybody that wanted to go long today, off of some easy shit. And then we hit the upper quadrant of that wick. Look at the bodies. Look at the bodies. They tell you everything. And then this is that old daily high. So this is daily buy side liquidity. Look at the bodies. That's telling me that we don't even want to explore up there. Upper quadrant, boom. That being said, since this is the candle that took buy side, I'm using this candle as my change in the state. As my change in the state. Yeah, use the bodies, whatever. Look at the bodies. Mohawk barely closed above it, opened above it, and spooled lower. That's the kind of rejection you want to see due to the fact that it even closed up there. Failed to reach the upper quadrant here, failed to reach the rejection block. This is my change in the state. Not down here, I don't care. Right here. The last up close. Next candle, boom. We already traded past this fair value gap. We already traded past this fair value gap here, but like when we closed below it, wick below it, that already validated my change in the state. So now I'm waiting for a close and then actual resistance to be used, which is us trading up, failing to reach mean threshold, not consequent encroachment. If I said that, my bad. Mean threshold, and then we displace lower. So that displacement, even if it's just a wick, we still displaced and we shifted structure. Even though we didn't touch the opening price, That's a bearish signature. The entire, from candle, wick, from wick to wick, the entire thing is my bearish order block. That being said, I'm seeing this as my bearish propulsion block, these up close candles. Using this as my high probability inversion fair value gap. So it's all here. I mean, threshold, respected, displacement, change in the state, order block inside of that, or if you want to use this as a change in the state, whatever the case is. I'm seeing this as a change in the state, an order block inside of that order block, basically, and I'm seeing that as a propulsion block with a high probability inversion fair value gap inside of it. I'm forming right here, and we trade inside of it. Look at the bodies all the way down here. Look at the next candle. Hit the low of that proportion block, and we sell off. We displace. Now we have a high, we have a low, we have a higher high, and we have a lower low. Now we have a bearish breaker. That shifted structure, and the best part, wick quadrant. Wick quadrant, consequent encroachment inside of this fair value gap. If price traded into here and didn't leave this as a breakaway gap, which is fine that we did, that's just very bearish. If we traded anywhere inside of this fair value gap, whether it's institutional order flow entry drill, whether we hit the opening price, I'm at the closing price of the breaker, whether we hit consequent encroachment, whatever the case was, this is a very high probability entry, and it's right before the macro, formed right before the macro. Macro starts. Oops. Macro starts. Still going lower. Wick, up close candle supports, provides resistance. So I'm watching this wick and I'm watching this inversion. We couldn't even reach that. That's what I was missing. Close, open, close, open, close. That's what I was missing. There was something in there that I wanted to add. But, alright, boom. That being said, we failed to reach the inversion. We tap consequent encroachment, eyeballing, and we failed to reach the low of consequent encroachment of this new week opening gap. And we also used it here. Failed to reach the high here. Respected consequent encroachment. Respected the low. Failed to reach it. Failed to reach it. Consequent encroachment of this wick. Displace again. And here's where the highest probability entry comes from. So we're inside the macro. Fair value gap forms. Fair value gap forms inside a first fair value gap, inside of an inversion fair value gap. So you have 1, 2, 3, best part of it as well, 4. So anything over 2 PD arrays, especially if we're in the direction of the bias, very high probability. And as you can see, if you entered inside of the first fair value gap, anticipating that we're definitely going to trade back up to it, considering we closed below it and we formed a fair value gap, wick quadrant, all of that, look at the bodies, how they respect the inversion fair value gap as well. But look at first fair value gap. Best entry ever. Best entry ever. Stop loss above consequent encroachment, or here, so you're above the open range gap high if you want to be safe. But we shouldn't even trade back up there considering we have 4 different PD arrays. Very, very strong, important PD arrays, especially inside the macro. And we want to see price deliver. We want to see price spool, sell program from the propulsion block, trade back up, shit, high, low, higher, high. Shit could be a breaker too, like. But yeah, that's how I depict high probability entries, using these quadrants of these wicks and whatever else that's there for me. Any other PD arrays, but if I have a fair value gap with a wick sitting inside of it, not at the low, not here, not up here, right inside of it, in the middle, anywhere inside of this fair value gap where it's open, that's how I depict my high probability entry, being the fair value gap. And what do we do right after that? Barely any drawdown. Don't come back up. Institutional order flow entry drill. Another wick quadrant. It's the low, but I don't care. Fail to reach it. Institutional order flow entry drill. Sell off. Daily order block. Inside of a fair value gap. Same thing. Opening price. Inside of the fair value gap. And we sell off, and then sell off, and sell off, and sell off. And then opening range gap. Here, order block. New day opening gap. Opening range gap. 1, 2, 3 PD arrays. Sell off. Fill the gap. And then ultimately the draw, the fill of the new week opening gap, and the daily relative equal lows. Very sexy, yummy day. But yeah, that's all I got for y'all today. I highly recommend using these quadrants. These quadrants, they'll help your trading immensely, deciding what is high probability and what's not. What's very, very, very high probability, what's more likely to happen. Because just any fair value gap with a quadrant in it, it's not always going to bust down. But as you can see, this is your first fair value gap, and there's a quadrant in it. Closed here, trade back above it, came back down, failed to reach, took us to the buy side. Do your due diligence. Trust. It won't fail you. It won't fail you. But yeah, that's all I got for y'all today. We'll have some accounts soon. We'll be passing some accounts soon. And then we're going to get busy. We're going to keep the videos going. Show y'all how to really get active. And then I just got to get over all that internal bullshit I got. And we Gucci. But yeah, today was low-key a really good day. Imagine holding from anywhere in here. That's probably a low-risk sell. Like, just sell for the rest of the day, bro. I so wish I had an account. But yeah, that's it for you guys.